Hey, it's Tom here and welcome back to the channel. So I've been investing in the stock market now for about 4.5 years, and throughout that time frame I've had a pretty good evolution and I guess in later times a bit of a refinement in my investment strategy. When I first started out investing, it was very basic, and it was basically just looking up stock charts for companies that I was familiar with. If the chart was going up and I thought that that company might have a good next 6 months or a year, then I thought that must be a great investment. And admittedly, I had some kind of dumb luck with that strategy. I made a little bit of money, nothing crazy, but I never experienced any significant losses kind of with that particular strategy. Admittedly, I only did it with like 2, maybe 3 companies, and it all sort of happened within like 6 months or a year. And I quickly learned that I should probably be doing something slightly more intelligent if I wanted to put more serious amounts of money to work in the stock market. And since that time, I've come across a whole range of different information when it comes to investment strategy. And kind of the area that I've landed on, if you've watched the channel before, you'll probably know is focused largely around value investing, Warren Buffett style, basically trying to understand individual companies and if those individual companies are trading cheaply relative to what we think they're genuinely worth based off the cash flows that they're likely to produce out into the future, then we go ahead and make those investments and really treat ourselves like true owners in the underlying companies that these stocks represent. So in this video, I really want to share, I guess, what Guy Spear might call the education of a value investor, only from my personal perspective. I want to give you basically a few of the key resources that I think helped me the most, and a couple of the mistakes that I made along the way in terms of trying to educate myself and trying to build an investment strategy over time. And I'm going to focus this video, I think, largely towards the people that are really just getting started in the stock market. But even if you have been investing for several years or maybe even decades at this point, I hope there is at least 1 or 2 things in this video that are useful to you in your investment journeys as well. But before we get into that, we do have a sponsor for today's video, and today's sponsor is Hatch. Now, Hatch have been my personal broker of choice for me, based here in New Zealand, being able to buy shares in large US companies. They have really changed the game for me personally. Before Hatch, I was stuck basically paying very large fees to do these US investments through some of the big banks. There just weren't really a lot of options here in New Zealand to buy shares in US companies easily and cheaply, and Hatch have really came into the market here in New Zealand, and they've been an absolute game changer in that department. So I was using Hatch for a long time and paying for it with my own money long before they were a sponsor of the channel, but they're a company that I am more than happy to partner with, and they've been a long-time sponsor on the channel at this point. And besides the simple platform and the low fees, Hatch have continued to improve the platform over time, largely from feedback from their users, from the everyday investors that are using the Hatch platform to put their money to work. And one of the cool features that they've added just earlier this year is the ability to set up kids accounts. So you can now set up accounts for your kids with actually much lower fees again than the traditional Hatch accounts. And we all know that the power of compounding is kind of the secret sauce when it comes to long-term investing. And really no one has a longer time horizon than the people being born today. So if you're interested in checking out Hatch in general or the Hatch Kids accounts, you'll need to go to the link hatch.as/investingwithtom. If you start a new Hatch account via that link and deposit 100 New Zealand dollars into that account, Hatch will give you a free $20 top up so that you can get started investing with a little bit more money. Okay, so to kick this video off on a few of the things that have been most helpful for me to sort of build up an investment strategy over time, I want to share 2 books with you. These are Rich Dad Poor Dad by Robert Kiyosaki, which I'm pretty sure probably everyone has heard of at this point. It's the highest selling personal finance book of all time, and for pretty good reason. This is actually the first book on money that I ever read. And it's a really good book, I would say, to get your kind of mind in the right place in terms of trying to build up assets that produce cash flow and put money in your pocket over time. And the larger that you can build up that base of assets, the more cash that's going to spin off, and the closer that you can get to financial freedom over time. So if you haven't read it, it's a very quick and easy read. I suspect many of you have, but Rich Dad Poor Dad was fantastic. After reading this book, I basically went down the rabbit hole of trying to find actual strategies to invest money. So after I'd read this book, I think I literally only had like a few $1,000s in my bank account, fresh out of university and kind of a few months into a new job, my first kind of professional job. So I didn't really have enough money to invest in things like real estate, which Robert Kiyosaki is a big advocate of. But Robert Kiyosaki did also talk about investing in stocks in this book. And although I, looking back at it now, don't particularly agree with a lot of the strategies around stock market investing Robert Kiyosaki was talking about here, with basically speculating on like commodity stocks and stuff. But it was a good kind of book to get my head in the right place and start looking at potential alternatives to things like real estate. And after doing that, I very quickly discovered the world of Warren Buffett. You quickly kind of come across Warren Buffett, discover he's the greatest investor of all time. $10,000 invested in his company, Berkshire Hathaway, back in the 60s. When he first took it over, would be worth millions and millions of dollars today. So when you hear Warren Buffett say things like The Intelligent Investor by Ben Graham is still the best book on investing ever written, it's pretty hard not to go out and grab a copy. And I would say that although many of the core lessons in The Intelligent Investor are very, very good and still apply today, considering this book was written well over half a century ago at this point, it is a bit dry and kind of heavy, particularly for the brand new absolute beginner in investing. So if I were to go back and do it all over again, I probably wouldn't start out with The Intelligent Investor, but it's certainly got some core lessons in there that are worth checking out once you're maybe a few months or a year kind of into this investment journey. Some of the core philosophies that Ben Graham lays out in The Intelligent Investor are still very, very powerful and great kind of mental frameworks for long-term investing even in 2021 as I record this video. Things like buying into a stock as ownership in a real business. It's not just buying a piece of paper or, in the modern age, buying a ticker on a screen that has a stock chart and all that. It is real ownership in a real business. Margin of safety are the three most important words in investing in terms of trying to protect yourself from downside. And also in the short term, the stock market is a voting machine. In the long term, it's a weighing machine. And if you buy good businesses at appropriate prices, there may be some short-term volatility, but if you're right on the underlying business and the price that you paid, over the long term, your returns will reflect that. So if The Intelligent Investor by Ben Graham is maybe not the ideal place to start, where is the best place to start? Well, the answer for me, and probably the investor that was by far and away the most influential for me when I was really first getting started out, is Phil Town. Now, Phil Town has a few different books, and I'll kind of just briefly talk you through what's in each of them. I actually first came across Phil Town from his podcast Invested, which he does with his daughter Danielle Town. If you're not into reading, go check out the podcast. That covers a lot of the content, although you will get into a few more specifics with valuation and so on in Rule 1. But Phil Town was sort of the first person to actually lay out the sort of Warren Buffett investing framework in easy to follow and kind of practical steps. And looking back at it now, there are things that are certainly simplified and you can sort of graduate beyond Phil Town over time. But I think it still is a really good place to start. He lays out sort of his 4M checklist of how to analyze an individual business. Meaning, do you understand the business? Moat, does it have a competitive advantage? Management, does the management team have integrity and talent? And margin of safety, are you paying an appropriate price for that business? So Phil Town covers all of that in Rule 1. He actually does have some sort of more trading focused stuff in the back kind of third of this book, which in later books like Payback Time, he actually kind of goes back from, and he, I think, maybe got some negative feedback about the trading components of his strategy. So I would largely ignore basically the back third of this book, but it is a really good place to get started, and that lays out the basics of like I said, the 4M checklist and so on. So after that, Phil Town did also come out with Payback Time. It is covers a lot of similar content to Rule 1, but like I say, the main difference in here is getting away from that sort of trading mentality and saying that, if we think a stock is going to go down, we shouldn't be looking at technical signals and selling out of that. As long-term investors and owners of these underlying businesses, if we still like the business and the price of the business gets cheaper, why wouldn't we just keep buying and kind of average our price down over time? And it shows the power of using a strategy like that and averaging down. So that's Payback Time. And we also have Invested, which is kind of a follow-up from the podcast that Phil and Danny Town started, and it's a collaboration between those two. So the father and daughter duo wrote this book, Invested. So if you just want to keep it simple and only read one of these Phil Town books, I would really just jump straight to Invested. That basically summarizes Rule 1 and payback time. Also follows Danny Town's sort of journey through the investing world, and adds some kind of new stuff on top with things like a calculation of owners' earnings, which is, again, a Warren Buffett kind of philosophy around how to think about business valuation. So since I read some of those Phil Town books, probably in my first year or so of investing, alongside The Intelligent Investor, which did make a little bit more sense having read the Phil Town books later, my core investment philosophy is really to a very significant extent unchanged from when I first got through some of those books. And I would say the key things that have really maybe added some fine-tuning to that strategy over time haven't necessarily been any brand new super novel concepts, but it's more been basically studying different investors and also studying different companies that they have invested in, and just trying to get basically more reps in the tank in terms of trying to understand different businesses, look at successful investments that people like Warren Buffett and other Buffett kind of style investors have made, and also look at some of the failures that they've had and some of the unsuccessful investments that they've had as well. And if I were to kind of summarize the strategy that I've largely landed on today, there's really two different types of investments that I will make. There is the investments in what I would call the 50-cent dollars. So businesses that aren't necessarily the highest quality in the world. They're probably not these buy and hold forever type companies like a Coca-Cola or a See's Candy or a Geico or an Apple that Buffett has in his portfolio today. They're companies that are cheap. We think we can get good returns out of them over maybe the next 3 or 5 or 6 years, but they're probably not going to continue growing the business at 10 or 20% a year kind of indefinitely, where we can just sit on our backside. That is kind of the first type of investment that I would say I am still very interested in. I'm yet to graduate to sort of the compounders and just have a portfolio full of them. But the other type of company that I will buy is the long-term compounders. I think that is probably the ideal place to get to if you can find enough of them, and that is really the challenge, is finding enough of them. If you can find an investment which you can buy and just hold for like 20 or 30 years and it grows exponentially for that entire period, that is obviously, the ideal place to get to. But realistically, those are not easy to come across, and a lot of investors really only pick up maybe a handful of those at most in their entire lifetimes, particularly if they run quite a concentrated portfolio and they're not spreading their money across 500 different investments. But those are kind of the two types of investments that I still continue to make. Phil Town's books are largely focused on more of the compounders and the long-term kind of growing businesses, but I have two books that kind of cover both ends of that spectrum that have really allowed me to fine-tune things a little bit from the initial Phil Town reading and learning from the podcast and so on. And those books are The Dhandho Investor by Monish Prabrai and 100 Baggers by Christopher Mayer. Now, The Dhandho Investor was released in around 2006 by Monish Prabrai, who is still an investor that I follow today. And at the time of writing this book, Monish Prabrai had cranked out returns after fees of around 28% per year. Just astronomical returns. We think about Buffett having a 20% per year long-term track record, admittedly many decades longer than Monish Prabrai, but anyone that's cranking out 28% or higher than Buffett for an extended period of time is definitely worth paying attention to. And at the time when The Dhandho Investor was written, Monish Prabrai was definitely one of these 50-cent dollar type investors. And The Dhandho Investor is basically a case study on several of these, alongside a few sort of entrepreneurial stories about businesses where the entrepreneurs that were running those companies were taking what Monish Prabrai calls a heads I win, tails I don't lose much kind of approach, which if you're making investments or making sort of bets, I suppose, in the stock market, if you can get the odds stacked heavily in your favor, where if things go right, you make a lot of money, and if things go wrong, you really lose, little to none. That's kind of the ideal place to get to in investing, right? You want to cap your downside, always have that margin of safety, as Ben Graham had recommended. So I definitely recommend checking that out if you haven't already. On the Punch Card Investing YouTube channel, which is a second YouTube channel that I have where we do weekly live streams with 5 YouTubers that are in this sort of investing world. We're actually covering some of Motor Proprietors' best investments in this coming week's sort of live stream. So definitely check that out. The other book I will just quickly recommend is 100 Baggers by Chris Mayer. So this one, as the name suggests, is around stocks that go up 100 to 1. Basically the ideal place to get to, and these are the stocks that just compound at aggressively high rates, at really high rates for a long period of time. The Costco's and the Berkshire Hathaways and the Amazons and the Apples of the world. And although you're not going to stumble across a potential 100 bagger stock every single week or potentially even every couple of years, it is a really interesting framework that Chris Mayer lays out. And it's actually quite a simple strategy that he kind of comes up with. He comes up with 2 main drivers for returns when it comes to long-term growing businesses. And those things are firstly underlying business growth, which is obviously a bit of a no-brainer. If you want to get really high returns compounded for a long time in one business, that business clearly has to be growing. But the other part of it is to pay an appropriate price, which is a common theme kind of across all of the books that I've mentioned. And he comes up with this kind of basic philosophy that if you can get part of your return from the growth of the business, and you can ideally have a little bit extra return from multiple expansion or people willing to pay a higher multiple of earnings and cash flows over time, if you can combine those 2 sort of forces together, you can really get some quite spectacular returns produced over time. So those are a few of the key lessons that I've learnt kind of over the past few years that have really, I would say, had the most influence on how I approach investing today. So I hope that was useful. And if you haven't seen some of these books or the podcasts that I mentioned before, I would definitely recommend checking that out. If there's anything also that has shaped your own investing framework and has really made a significant difference for you over time, I'd definitely be keen to hear those down in the comments below. I'm always looking for kind of new information to shove into my brain and get all these competing ideas working against each other to try and develop my own investing framework and find out what I think will work best for me personally. So that is it from me for this video. I do hope you enjoyed it. If you're interested in checking out the Hatch offer, you'll need to go to the link hatch.as/investingwithtom. Like I say, that's it from me, and I will see you in the next video. Cheers.